In this video, I'm going to share with you how to trade Crash 500 index using two simple indicators, and we're going to be taking just three candles from this Crash 500 index market. Okay, but first what we're going to do is to confirm our entries. So we can see right here that this market is buying, right? This market is buying, so the next step is for the market to sell. So like I said on most of my trading is that you should always check the higher time frame, like the 1 hour time frame, just to confirm your entries. Okay, but because we are using these two indicators, I don't think that will be necessary for us to check our higher time frame, since we are just scalping the market, taking advantage of small price movements like three candlesticks, right? So what we're going to do right now is to go into our indicator section, which is the indicators here. On the main window, the first indicator we're going to use is the RSI, which is the relative strength index. Okay, now I'm going to choose on the relative strength index and put it on period 14 here while we apply to close. The level is going to be on 90 and 10. Okay, for the level 10 we're going to put buy. Okay, we're going to put on buy on the level of 10. Then for the style, we're going to put it on 4 pixels. While we're going to put this line here on the middle, right? Then we'll click on done. The style here is going to be on 4 pixel, which means this line here that is close to this blue color, we're going to drag it to the ending. Then the style here, we're going to put it on the blue color. Then this line is going to be this first one, which is this black thick line here. Then we click on done, right? So this is the RSI. Here is 90. Here is level of 10. So this is the buy we should put on the description. Then we're going to put indicator window 1. Then we're going to choose on the stochastic oscillator as well. The period here, which is percentage K period, put it on 5. Then the percentage D period, we're going to put on 3, while the slowing is going to be on 3 as well. Then the price field is going to be low/high, while the method is going to be exponential, right? I'm going to put the method on exponential. The levels here is going to be on 22, 80 and 67. Okay, then the style right here is going to be on 4 pixels. Why? We're using this middle line here that has space. Then the color is going to be on black. We click on done, right? The main here is going to be on 3 pixel, which means we're dragging this line from this first position to the third one here. The color is going to be on black. The signal is going to be on the second line. From here it's going to be here, which is the second line. We call it 2 pixels. Then this line here is going to be this first one, which is the thick one. Then we're going to click on done. Okay, now this strategy is pretty easy to understand. Okay, so what we're going to be doing here is just taking 3 candlesticks, we're scalping the market, taking advantages of just those 3 candlesticks from this market, right? So this is the trend here. Now we saw that I told you guys that this market will drop, okay, because the market was buying for a particular period of time. So the next possible move is a sell, right? So this market just sold right now, okay. And so what we're going to do right now is to place a buy for 3 candlesticks whenever the stochastic oscillator crosses below the level of 10 at the relative strength index, which is the RSI, at the oversold here. Okay, this is the oversold region. So whenever there is a crossing, you see a crossing here, this is a crossing. Okay, now but this crossing need to be at the right hand side, which is at this point here. Okay, this is the first crossing at the left. So when it cross here, it's gonna go over to this point, then here. Okay, this is it. So there's a crossing below this oversold. Okay, now when you see the red and the black together at the level of 10, okay, at the right side, the level of 10 below here, you know that you're going to place a sell for 3 candlesticks. Okay, now we're seeing the same position at this point right now. This black line just crossed below the level of 10. Now it's going to be at the right side when this red line crosses. Okay, when the last red line crosses this black line, okay, it's going to be together. When they are together, when they meet, okay, just at, you see at this point right now, when they meet, okay, you are going to place a sell. Just as you see at this point, it crosses at the right side. Just you are seeing here, it crosses at the left side at this point. Just as seen here, it crosses the same way at the left side. Now, this red line you are seeing here, it will now go here and curve. Okay, it's going to curve, and when it curves, it's going to meet this black line at the left side. So that's when you place your buy for 3 candlesticks. Okay, and you take the profit from 3 candlesticks from this market. Very simple strategy for you to make profit from. Okay, taking advantage of small price movement, just as we are seeing here at this point again. At the left side, when they meet, this is at the level of 10. They meet at this point, you take your buy for 3 candlesticks. You don't need to stay in the market for too long. Just take those small profits and you wait again for another good opportunity. That's how you can grow your small account on the Crash 500 index using these 2 indicators that I've just shared with you guys right now, the RSI and the stochastic oscillator. Okay, now this strategy is not 100%. There are times whereby the market might go the opposite direction, okay, but the accuracy probably should be around 80%, which is a good strategy. Okay, so we're seeing at this point that this black line crosses below the level of 10. Okay, when it crosses below the level of 10 and they meet at this point, this red line touches this black line at this point right here. So you place a buy. Immediately you see there is a crossing. Okay, you place a buy. Immediately there's a crossing at the right side. You count 1, 2, 3. Okay, you count 1, 2, 3 and you're out of the market. Okay, so you don't so that the spike doesn't come after you. Okay, now we see that even though there is a spike at this point, but this is at the oversold. Okay, so if you are on the market and the spike meets you at this point, let's say you bought the market and the market spiked after you bought the market and you saw that price is at the oversold, you shouldn't be afraid on the market because you are going to make back those profits. Okay, because price at the oversold and the market need to buy to make back this sold. The market has sold for a particular period of time. Let's mark this point so that you can see the market started selling from this point down to this point. Okay, so now the market needs to buy again upwards just to stabilize. You need to stabilize these sell positions. Okay, started selling from here to this point, then it bought here, it sold again, it bought, it sold again, it bought. Now it continues to go upwards at this point. Now you make back those profits. Okay, now let's see what we're talking about here. Okay, perfect guys, perfect. Take a look at this. It crosses below, okay, the level of 10 and there's a crossing now. So this is a good opportunity for you to place a buy and count your 3 candlesticks. Okay, there's a crossing here, you place a buy immediately and count your 3 candlesticks when you see that there's a crossing. Okay, so we can see that this strategy is actually working and is a perfect strategy, but it's not that accurate. Sometimes the market may go the opposite direction. Okay, the market may go the opposite direction, right? So we can see that this strategy can help us grow a smaller account, okay, just by taking 3 candlesticks, taking advantage of small price movement from the market. And you don't need to be greedy on the market. Just set your goal. Let's say you take 3 candlesticks from this first entry right here. You take 3 candlesticks from here, then you wait again for another opportunity. You take another 3 from here. That's 6 candlesticks successfully you have gotten from the market. You take another one again. That's 9 candlesticks you have gotten from the market. And if you are using a lot size of about 1, if you are using a lot size and if you are using a lot size of about 0.2, you know that you'll be making possible 10 cents, which is 0.10 from the market. And if you times that 0.10 times 9, right, 0.10 times 9, you know how much you'll be making from the market, right? Which is going to be about 0.9 cents. Okay, 0.9 cents, almost about $1 from the market as your profit. Okay, in just few minutes you make about $1. Now imagine if you continue the same process and strategy over and over again. At the end of the day, you probably make about 50 to $100. Okay, following the same process and strategy, maintaining your low risk management technique. Okay, this strategy is probably about risk management technique. Okay, you see how low this risk management technique is. Okay, and know that sometimes the market might go the opposite direction. Okay, the strategy is not that 100%. Okay, now we can see that successful if you have placed a buy at this point. Trace it up. Let's zoom a little bit. Okay, place it up at this point here. If you zoom now, you can see that we place a buy at this point, right? We place a buy. One, two, three candlesticks successfully, and price is at the overbought, right? Price at the overbought. Okay, so guys, I believe after watching this particular video, you now understand how to trade crash 500 index using the RSI and the stochastic oscillator indicator to trade perfectly and get 3 short candlesticks successfully. Okay, so if you found value in this video, do it to like and subscribe to the channel, the Daily Forex.